there we have it. We had this conversation with James Allen this morning, and later on in the interview he went on to say that South Africa is the best space for platinum right now. Mining, of course, we've got the resources. You've got to, though, question the context within which these miners have to operate.
Look, I mean, yeah, and he's right. I mean, we are roughly 80% of global platinum supply. So it is a South African metal, if you want to so call that, I guess, dominated from a South Africa perspective. And it is a company, I guess, which is in a very early stage of the value pipeline. And obviously, depending on the additional work that they'll be able to get done and the type of results they will get in terms of geology of the properties, will actually determine whether we'll see this company sort of stepping up through this value curve, and how successful they will be able to do that. It does look like they want to utilize some of the other mines and their neighbors' infrastructure, obviously, to access a lot of this, a lot of their resources. So which in a way is kind of takes some of the risk off, that you don't need to, planning to sunk in this massive amount of front-end loaded capital in a certain environment.
Kobus, having a look at the differing fundamentals between the actual platinum shares that you can be exposed to, which of course are concentrated in South Africa, and the actual fundamentals for the metal itself, investors have a difficult decision to make. It's not as if, like with gold, you can choose Harmony or Barrick or Newmont or Goldfields or something like that. If you want the shares, you have to buy South African shares essentially. Have you got differing opinions on the direction of the shares versus the direction of the metal?
Look, yeah, I think, if one sort of look at the space and the equities relative movement to the metal, it's very important that you actually discount the actual metal price movement with inflation, because that is ultimately what the companies materialize, and also almost with the capex requirements around that. So, I guess the metal at this stage of the game looks like it's sort of the safer option. I think in many of these valuations, and the higher marginal companies like the Aquarius Platinums and the Lonmans, and even to some extent Amplats, requires a much higher platinum price to really sort of get the kind of returns that many investors want to hang their hats on. In an environment like that, you got to see the PGM basket price increasing by quite a bit, and you sort of separated then from the operational risk, from all this, other type of leakage that you can see, that may happen if you are sitting in some of these equities, but then again, I guess the shares are seen to have more leverage, I guess, when things really start to turn, as the market sort of price, kind of that gearing effect quicker in. But I think we're still in a tough environment. We're still in an environment where the market is restructuring. Everyone's looking at Anglo Platinum now to wait and see what their restructuring is going to look like, and where it will sort of leave the platinum market in the end of the day.
I picked up, some analysts saying that the platinum is not a good barometer to gauge the industry's health, but rather the individual platinum stocks. That gives you a better indication of the industry as a whole. Where there's a lot of noise in the sector right now, investors, they're saying, don't invest from a real demand point of view, but rather from a short-term speculative point of view. Is that something you agree with?
Look, absolutely. We've seen how our interest has sort of gone into NYMEX, the physical investments. We've seen how those volumes shot up, since the Americana events played up, and it's clearly a play, where they are worried about security of supply going forward, and to what extent we can see the metal price, getting bid up in that fashion. Look, it's always dangerous when you sort of see prices screaming up for the wrong reasons, and I think that's what we've seen in the platinum space in particular. And we've seen the price sort of moderating down, and my expectation is that they'll sort of keep on seeing that until we see more sort of decisive action from Anglo Platinum, coming out to that point, and then to sort of gauge where we're sitting. If you look at industrial demand for platinum since 2001, we are sitting at pretty much the same levels as then. But ever since then, obviously, as we know, mines have added massive amount of capacity. We've seen the secondary supply market, the recycling market has actually been booming, providing a lot more metal today than what it did 10 years ago. So it's these type of challenges, I think, that the company's got to incorporate in their thinking and their planning, with regards to their strategy going forward.
Yeah.
Kobus had a good chat with a platinum analyst yesterday, and the company that he represents, which I won't mention, has been buying platinum for the last year and a half, platinum shares, that is, for the last year and a half. And the core of his argument for platinum stocks is that he says something like, the price to book value. He says the average price to book value of Anglo-American Platinum, for example, is 4, and it's currently trading at 2. So that is the main reason for them getting in. Is that a good enough reason, do you think?
Look, it's risky, in our view, we sort of expect quite a material asset write-down or book value write-down to come out of Anglo Platinum if and when they do announce a sort of restructuring of their Rustenburg/Union mining areas, and I guess the book value that you see today on face value is not necessarily the one you may see next year this time. I think and also if you look back on some of these companies, you sort of compare, to what extent they've been able to grow their production relative to what percentage they had a growth in their issued shares and share capital, then some of those numbers is also alarming in terms of the dilutionary effect that we've actually seen over time. And it speaks towards poor capital allocation. Some of these companies obviously investing when margins are peaking out, putting a lot more capital in those type of times, and now where we should actually be investing, they're pulling back capital. So it's almost like the wrong way of allocating capital. And as we know, in the mining space, like many spaces, and especially in the mining space, if you are disciplined in terms of your capital allocation, your return's gonna suffer.
Yeah, we heard James Allen says he believes that we've hit the bottom of the platinum market. Is that something you concur with?
Look, it's in a process of restructuring, all right, and I think that's a step in the right direction. Whether the market has restructured enough, I don't think so. I think we've had this hesitancy, and there's a lot of other complications from a social and political perspective. I think that sort of constrained a lot of this restructuring efforts that we should have seen, I think, or that one would have generally expected. But it is more complex. These projects have got 10 years lead times, to them, and it is a much more complex situation, and I think we've got to see more.